welcome. We are live today. We have a very special presentation for you. So this is all about how to get prepared and how to win big in what we're calling the next great real estate reset. So without further ado, we're just going to go ahead and get started. And so we do want to mention a quick disclaimer here. So I'm just going to read this verbatim. The statements contained herein may include statements of future expectations and other forward-looking statements that are based on Rockstar Capital's current views and assumptions and involve unknown risks and uncertainties that could cause actual results and performances to differ materially from those expressed or implied in such statements. Such forward-looking statements speak only as of the date hereof, and Rockstar Capital undertakes no obligation to revise or update them. This specific presentation is not a solicitation of any offer to buy or sell any interests, securities, or to otherwise participate in any investment or trading strategy. Any such offer will only be made by means of Regulation D offering documents, which may be updated or amended from time to time. These Regulation D offerings under 506C are for accredited investors only, and past performance is not an indication of future results. Investing involves risk and may result in partial or total loss. Prospective investors should always consider carefully investment objectives, risks, charges, and expenses, and should consult with a tax, legal, and/or financial advisor before making any investment decision. So again, we just want you to be well informed and be able to get the best information possible, and of course consult with professionals. So we are going to go ahead and continue on. So yeah, we are just going to introduce Mr. Robert Martinez.
Hey guys, hope you guys are well. Thanks for joining me on what day is it now? Wednesday evening at 7 p.m. Man, I'm telling you, the year has gone by so fast with all that it's occurring in the real estate world. I want to get through, I don't have a lot of data to give you, but I have important data to give you because this is a very, very important webinar. I don't know how many of you sat in or how many webinars you've been through where they're talking about what's going to come. I live and breathe and die by this stuff. I am living it every single day with my team. I see what's going on and I see what's going to come. And why I recognize that is that I was around. My whole career got started, back in 2007. And during that time, I can see a lot of the same similarities. And I don't want to steal my own thunder, but not all economic downturns or recessions are the same. They are different. I went through multiple downturns in the last 15 years, and this one is interesting. This one has got a lot of hair on it. And I'm glad you're tuning in tonight so that you can listen in on how you can win during this next downturn, because anybody that has any skill today, and I'm talking like, the Brad Sumrocks, the Rod Khalifs, the Grant Cardones, the Del Walmsleys, everybody was in the last real estate recession back in 2007. Anybody has any unit count got started back then. They got started back then because everything was so depressed, and we were able to pick up some amazing deals at amazing pricing. This is a similar kind of recession. This is the one that we always want to say, hey, we're waiting for it. When's it going to come? I'm not going to buy until it comes. Well, this is it. And what's going to happen is a lot of you are still not going to buy because you guys can't recognize it. You when times are good, you can't wait for the bad. But when the times are bad, you get scared. You get scared and you go into your turtle shell. And you don't react. It's those guys that are willing to react. Those people that are willing to jump out of their box of comfort and take a risk are the ones that are going to benefit tremendously in this upcoming recession. So I'm open to questions. I ask that you raise your hand and allow us to call on you if you have a question at the end of the presentation. Hopefully no one's able to unmute themselves and throws off my jam, but I want to go. So we have a lot of people. I have a lot of current investors on the call, and I have a lot of people that are familiar with me, but maybe don't know a lot about me. So I'm just going to spend a minute or two to tell them about myself. As I said, I got started back in 07 to 2009. When the recession was occurring, that's when I was cutting my teeth. Over the next 15 years, I've become a highly decorated apartment owner. I'm a 5-time apartment owner, 2-time city owner of the year, Houston, 1-time Texas owner of the year, right after COVID, because of what we did during COVID, and a 2-time national owner of the year. And we became, I earned those awards based on my ability to deliver records. my ability to deliver cash to my investors. My company, Rockstar Capital, has earned 19 city, state, and national apartment association awards since 2011, based primarily on our ability to deliver and hit expectations. We've hit 16 cash out refinance events in 12 years. The last one was very interesting because it was the first time that it wasn't a refinancing where we returned 100% of cash. This was a very different one where we had to do a strategic refinance, and I'll explain to you and the reasons why on that. Overall, since 07, I've been the key man overseeing, underwriting, operating 38 different transactions. Next slide. Okay, so let's get into it. I don't know how many of y'all were invested in real estate in 07, 09, but that is when my real estate education began. I remember walking into the doors of Lifestyles Unlimited in January of 07, and I paid them $500 to teach me a little bit about real estate. And when I walked in, I thought I was going to be the single family king. That's what the Saturday course was about. Sunday was all about multifamily. Sunday is where I was able to recognize, wow, this is really where I can make some money. I can make cash flow, I can make appreciation, and I can save on all that money. I can take advantage of cost segregations and get depreciation so that you reduce your tax bill, or maybe not even have to pay any taxes. And in fact, because of my efforts in this, I haven't really paid taxes. I haven't had to write a check to the government since the day I walked through Lifestyles, because I immediately got started investing in deals. So as the world's coming to an end, because that's what it felt like to a lot of people in 07, 09, people were losing their businesses. We saw a heavy unemployment. We saw banks failing. We saw a lot of the things. And this is when I'm actually getting to the deal. See, I didn't know then what I know now. There was no fear. I was ready to take that risk. I was ready to jump in to the deep end of the pool. And I had a partner, and he and I went on to buy 10 deals. And during that time, it was really crazy. I remember being at our largest deal, Casa Verde, and it was 384 units, mostly undocumented applicants. But that's how it was in that submarket up in Northline, Alief area, and not Alief, Alding on I-45. And I remember 30 move in, 30 skips. 30 move in, 30 skips. And that was all throughout the recession. And I remember thinking, man, this is crazy. We're going to lose these deals. We can't keep heads in beds, which is how you make money in real estate. It's not when people move in, it's when they renew. And if people aren't renewing, you constantly have higher turn costs. But we survived it. In fact, I was able to oversee 3 100% cash refinance events during that recession. Nobody was doing that during the recession. We're here refinancing, returning people's cash back, putting more debt on our properties when the economics are going down, but because I learned how to operate. I learned how to keep us afloat. So when it was my turn to start my own company, which is Rockstar Capital, I got started right in 2010, 2011. I want to argue that was probably the low point. Maybe you guys were invested in real estate. You can give me your 2 cents at the end of the presentation. But my very first deals were in 2010, 2011. That's where I thought that the recession ended and the recovery was beginning. Now, what was really interesting is that people were afraid to invest. Very afraid. I remember my very first deal was bought in 2010. It was a deal called Water Chase. I paid $2.9 million for it, 118 units, and I was raising $1.5 million. And it took everything I could to raise $1.5 million. And even though I had a little bit of a track record, having done 3 100% cash out refinance events with my old partner, people weren't sure that I could do it. They weren't ready to give up their money. They were afraid because of what was going on. The stock market's tanking. My own parents lost half their worth during the stock market because they didn't know what to do. They weren't smart enough to get it out, and all that, and watching all the banks fail. So it took everything I could to raise that 1.5 million. And I hope there's investors on this call right now because we still own that deal. Here it is. We bought that in 2010 for $24,500. And can you believe I had people that were afraid to put $100,000 into that deal? See, when times are tough like right now, people don't want to let go. They get really scared, and as you should, you want to conserve, but you also want to take advantage of what's going on in the market. Those who have cash win. It's every single time. Liquidity wins. And I bet those investors I bet they wish they could put more. I wish I could put more. I put $150,000 into that first deal. I was 10% of the 1.5 million that I raised, and I wish I had put all the money. I wish today I could write a check and write all the money, because that deal, we used to own it today. It's probably returned. It's probably, if I were to sell it, it's probably in the range of, I don't know, $800, $900, $1,000, 1,000% return, depending on what the market would allow today. I'm not a market seller. I don't want to sell right now. I want to wait till rates settle down until the Fed stops moving rates before we consider selling. But that's how I got started. My second deal, which we're going to talk about really quickly, was a deal that we actually bought and sold. We bought it in 2011. Give me a second. I'm gonna bring up the slide. There we go. We bought it in 2011. I paid $15,500 a door. We raised 1.1 million. Another deal, we paid 1.9 million for it. 126 units, came out to 15.5 a door. And it was much easier to raise this one, right? Because people saw what I did at Water Chase. They saw how we were returning money. And people were like, man, I want to get in. How do you lose at 15.5 a door? And you're absolutely right. But people were still scared. It's still the bottom of the recession. I made some really good investors here. Rick and Rosa Martinez, I hope they're on the call. They've been investors with me ever since this deal. And I'm truly grateful for them. This was a deal through, it was an operational play. It had been foreclosed twice in the previous 10 years. And when we got it, it was full of scum. It was full. It had a terrible manager and it had terrible residents. And through our operations, through what I had learned the previous years, we turned it around. And in fact, we turned it around so much that for 4 consecutive years, we were ranked in the top 1% for resident satisfaction nationally, awarded by J. Turner Research, the leading resident satisfaction company. This at one time was ranked number 37 in all of the country. This little classy 1974 deal, you know. And how did you do that? You did it by paying attention. You did it by understanding resident tendencies. You know, we do a lot when we do our rehabs. We replace all the air conditions. I like to do that because I don't want my residents to move out. The number one reason why people move out is maintenance. And number one maintenance headache is air conditioning. So that's part of our renovation plan. I changed out the boiler. I want the boiler to be brand new. I want your standard luxuries of life to be on demand and to work flawlessly. I want cold air, I want hot air when the heat's on, and I want hot water on demand. And when we sold this deal, we sold it in 21, made a fortune on it. The guy that owns it, because it's real estate, you can keep making money in real estate. You know, he's continuing to push rent and he's making a ton of money. We actually made, $10 million to our investors. We raised $1 million, 1.1, and we were able to return $10 million when it was all said and done. I miss this deal. In some ways, I wish I hadn't sold it, but I was able to use the equity. And so did my investors, the investors that were in this deal, use that monster equity to go buy new deals. And imagine buying a deal and every year it's making, I don't know, back then you can have really good cash flow. We're in the 15, 20% cash flow a year. And we did it like clockwork. Boom, 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 boom. Then all of a sudden in 1 year, you sell it and you make like 700% on the back end. So when you total it all up, it's as if you were making like over 90% a year, every year you owned it. It didn't feel that way, but that's the power of real estate. If you can hold on to your real estate for 10 years, you will make money. You will make money because real estate does this. We have peaks and we have valleys, and there's ebbs and there's flows. And right now we're going through a little bit of a down cycle. We've got to survive this. You only lose money in real estate when you run out of time or you run out of money. And what I'm really learning now is when you run out of creativity, because you can fix those two. But that's what's occurring right now with this great reset that's about to occur. Next slide. So back to it. So if the recession started 07, 09, and I think it bottomed out in 2010, 2011, you had this recovery. What the government does to help push the recovery is that they make a friendly environment. And in this case, they dramatically lowered rates. There's a period of raising rates, and then there's a period of reducing rates. And that's what happened during 2010, from 2010 on. We saw rate drops, significant. I have deals right now that our initial loans were in the 2s. And if you're a homeowner and you refinanced your house a couple 3 years ago, you probably have similar rates in the 2s and the 3s. But you know what? It eventually stops. You know, COVID came, and then we had a little recovery after that. But you know, the music stopped in 2022, and the music stopped in 2022 for one reason: the Fed had lent out so much money at super low rates, it created dramatic inflation. And the Fed, and so the Fed needed to control that. Here's when I know this was the last deal that I did before the end of the good times. Refinance in 2022. I'm excited about this deal. This was a 10-year loan that we put onto it. We took 7 years of refinance. We dramatically increased the value. We had enough money to pay off the old loan, pay the penalty, and still return to the investors roughly $7 million. So overall, the total return was closer to 208% in 7 years. But that was the end of the good times, because in 2022, the Fed decided to treat inflation like it was COVID. And they went and attacked it hard. And Jeremy Powell became the new Anthony Fauci. And that slide right there is very, very apropos to what's occurring. Every time that paper doll talks, it hurts us. It hurts us because, like a lot of guys out there, I have deals that took advantage of those super low interest rate loans, but they were variable. And if you don't have time, and I mean, like, you have deals that are coming due and you can't get them refinanced, you're going to lose the deal. If you have deals where the interest rates have risen so much that you can't afford the mortgage payment, you're going to lose the deals because you keep hitting your cash. They're causing havoc, or he's causing havoc among the economic world. And I would say that roughly 80% of the market is exposed to some sort of interest rate movement. Every time he talks, every time he says something, it creates problems. But I'm going to tell you this: what doesn't kill you will make you stronger. And it is literally a game of survival of the fittest. I have 10 deals that have interest rate exposure. And I've known about this since middle of last year, when I saw that the rates were moving. See, your people ask, well, why did you put high interest rates? Well, because every indication, we use all the same curves, we use all the same metrics, and there's one called Chatham. Chatham did not show that rates were going to go, because no one expected that they would move rates so quickly, so fast, just like COVID, right? Putting us in a lockdown. Everybody thought that this was going to be 2 weeks to flatten the curve, and they straight up lied to us. Well, they lied to us on those curves as well. You know, they did predict 6 interest rate movements during 22. We just assumed it'd be a quarter point. We thought it'd be a 1.5 point increase. The whole market thought that. And I'll show you that I'm not alone on this. But instead, the Fed moved it over 400%. They moved 4.5 points from the 4.5 points, 450 basis points from what they started to in January. And that is causing what you're seeing now. This is a self-inflicted recession. And those that can survive this are going to benefit. And again, what doesn't kill you will make you stronger. And Jeremy Powell is right at the center of it. You know, it doesn't matter that the rates are so high that banks are failing. Maybe it's got his attention now. It doesn't matter that the rates have moved so much that we can't even control our national debt. We can't service the debt. But he's creating massive issues. They want to bring inflation down. And I think it's beginning to work, but I don't know. We were so red hot, you know. But when the banks fail, you lose the people. And understand this, we've already had 3 banks fail. And there's more to come. It's just a matter of when, because they all have interest rate exposure of some sort. They've all been doing things over the last 15 years to get more and more aggressive and to satisfy investor demand, which is what happened to us. Why do we have low interest rates? Because we were satisfying investor demand. Everybody's wanting a cash out refinance in 3 to 5 years. And we looked at it and we thought that, hey, the rates would stay low. They didn't. They moved. They literally changed the game on us, just like they changed the game on us on COVID. Nobody saw that the day before COVID. I remember going to a conference in Orlando in February. And I was at the National Multi-Housing Conference, and I'm making contacts. We're talking about deals. 2 weeks later, poof, the world shut down. That was March of 2020. And we went into a whole new cycle. And I'm telling you right now, they're treating inflation like as if it was COVID. Next slide, please. And this is what's happening. This is the chaos. When you move the interest rates and no one's expecting it, people cannot refinance out of their loan because their debt to service ratio goes off. See, we're trying to comply with a 1.25 DSCR. That means your NOI has to be 25% higher than your debt service. But if your debt service is moving, your NOI cannot keep up. You can have a deal fully compliant in January of 2022. But by the end of their rate movements, the deal is not in compliant. And so guys, they ran out of time. Remember I said time and money. They ran out of time and they can't get out of the loan because they won't refinance. Here's an example. Veritas, very large group, $450 million loan defaulted. It's not that they couldn't pay. They had reserves. They were paying it. They just ran out of time. They couldn't refinance it. So now they're in special servicing. That's where the creativity comes in. What will that special servicer do? Will they work out a situation with them, or are they going to lose the deal? Here's another example. It hits a little bit closer to home. This is what happens when rates go up and you have a problematic owner. Arbor foreclosed on a Houston portfolio, $229 million. Now the guy shown is a newbie operator. He bought his deals in the most questionable parts of town. And I'm sure Houston looks very cheap to a lot of people from California, New York. He invested in Greenspoint. He invested in Southwest Houston. He invested in the areas you don't invest in, but he didn't know, or he didn't care. Because very quickly he got it handed to him. And when operations went south on him, at the same time that interest rates went up, it was over. See, for many deals, you have a distressed seller because interest rates are going up, not a distressed deal. In this case, it was both. And you know what happened? That deal didn't sit for very long. Arbor had somebody waiting in the wings to take over this guy's portfolio. And I think they actually picked it up for less than loan value. So if you've been doing this long enough right now, you're affected by what's going on. I don't know hardly anybody who doesn't have a deal that has some sort of interest rate exposure, because that was the flavor of the day. And it was like that for years. People were sucking the candy, taking as much of it as they could, and thinking that multifamily is going to go up forever. And that's what happened in this case right here. Let's go to the next example. But you know what? It's not just the medium-sized guys or little bitty guys. It's the big dogs. They're getting hit too. The debt on Blackstone's buildings is 47% more than the actual portfolio's worth. That means their value has come down so much because of rising cap rates. Rising cap rates move with the interest rates. If not, you have what's called a negative leverage situation, and you don't want that. You want your cap rate to be even with your interest rate or just above it. You want it to be right there. And Blackstone didn't see this coming. Now, Blackstone, you guys know, is the biggest of the big. All those guys, Blackstone, BlackRock, they're all the same. They got their hand in everything. They're very seasoned, very smart guys in a think tank, buying deals left and right. And they got caught with this too. So, you know, I've had some investors ask me, why didn't you see it? It's like, nobody saw this. I didn't do this. Blackstone didn't do this. The Fed did it. But how will you react? And this is where I get into the meat and potatoes of what's going on with this webinar. How will you react? I'm here to tell you that you cannot be scared when what you think the end is coming. It too shall pass. That's something that I saw recently on a video. It's Tom Hanks, it's Robert De Niro, it's a bunch of Adam Sandler. And they're all talking. Hey man, do you remember when you're on top of the world? Remember you're on top of the world? Yeah. And you had all these fans and you're winning awards. Yeah. And you're making mega money per movie. Yeah. It too shall pass. Remember when you were in the bottom? Remember when you thought there was a situation where you're not sure how you're going to get through it, and you're praying every night to God and you're asking for help and you're whatever? You know what? It passed. God found a way for you. And so that's what I want to leave you guys with on this call, is that everything will pass. But it's how do you play today? Blackstone has so much debt that it's worth more than their portfolio. And I like to use the website The Real Deal. Go to find it on the Instagram. And if you don't follow me on Instagram, please, at Apartment Rockstar. Okay. We have a ton of free content there. But I like to share articles that I find with The Real Deal. There's a lot of Blackstone articles where they're talking about they're giving the keys back. But just as Blackstone's giving the keys back, they're also doing something else. And this is what you guys need to pay attention for. Even though they're losing money on deals, they're not focusing on one deal. They're playing the long game. Blackstone just raised $30 billion in its largest ever real estate fund. They aren't doing that to go back and save their deals. Maybe they could be, I don't know. Maybe they could use some of that money. They're going out to find compelling markets, compelling stories. See, Blackstone can raise money like there's nobody's business. And their investors are savvy. And they understand I'm not going to win every one. I've got a great track record. And the most recent deals are the ones that are struggling because those are the ones that I have interest rate debt. But you have to rely on the sponsor. See, you back the jockey, not the horse. The jockey's going to make the deal. And while you may not make money today, the jockey will find a way to make money. He will find a way to finish that race. Maybe he doesn't come out first or second like he normally does. Maybe there's something wrong with the horse, but he'll get the horse across the finish line. He'll make sure that the money is returned and that you survive to play another day. And in the idea of Blackstone, another day is raising $30 billion to go take advantage of those that are not good sponsors, like that Houston guy that got taken behind the woodshed because he's a bad operator buying in problematic deals. And that's how much hunger there was in the market. He shouldn't have been able to do that, but there's so much hunger to give money away to a newbie investor in problematic locations of the city. But the savvy investor thinks, okay, this is one of those peaks and valleys situation. I've got a chance because of what's occurring to buy a new car at 2019 pricing. What is trying to kill me will kill somebody else. It will put them into the ground. I remember in the recession, it was me versus you. And I'm trying to put you into the ground by getting occupancy and you're trying to stay alive. And that's what happened. We put people into the ground at the same time we're doing refinance events because of operations and being able to stay on top of it. So Blackstone is going to double down, triple down, quadruple down. They're going to raise so much money because everybody knows that it's not a distressed deal that they're going to buy. They're buying a quality deal from a distressed seller. And I keep saying that because that's what's going on. It's not the deal that's in trouble. It's the seller. It's the sponsor that's in trouble. People will make money at it if you get it at the right price. I got a deal at $15,500 a door that had been foreclosed twice in the previous 10 years. And I made a fortune on it. I hope I have investors that are on this call that are listening to this because they use that money to buy other deals. We refinanced twice out of that deal, pulling the better part of 300% out. And then we cash flowed and cash flowed and cash flowed until we got that big payday where we took home 700%. But I'm going to tell you, the first 2 years were not paydays. The first 2 years were deep value where we didn't return a lot of cash because we spent it all on operations and all on renovations. And then we turned the rent roll, got all the old residents that we didn't want in there, the purple marshes that people like to say, and got quality residents in. Next slide. So here's what's occurring right now in the market. The old market is done. This graph should look familiar. This is the same graph that happens every single time when there's a recession and a recovery. The history will tell, but I would say the recession will go just like before, 2022 to 2024. I think the down market, the bottom will be right around the end of 24, 25. And I'm not alone on this. There's a motto going around the real estate world that's saying survive until 25. See, what everybody's predicting is that And this is before the banks failed. Okay, by the way, they're predicting that rates will come back down, that the economy will crater. But they're also believing that that's going to happen closer to the elections. Now, when is the election? Right around 2024, right? And so Biden or whoever he is, plastic face wearing mask guy, I don't know who he is, you know, he's going to want to have the best economy he can to go up against Donald Trump or whoever they're able to put in front of him. So the idea is to hold out until 2025, which thankfully all my permanent debt goes to 2025. I don't need to refinance right now in a higher debt market. I can hold on. I can wait a little bit and see what's going to happen. And I'll give myself until 25 to see where the rates are then. Next slide. And then there'll be a period of expansion again. So again, what is the Great Reset? Now, they're not all built the same, okay? Every recession is different. This so far is not a labor market issue. That's what was going on before. You have people losing their houses. Many of you that refinanced your house 2-3 years ago, you're not going to lose it because you got in at 3%. You don't want to get into this market. You don't need to sell your house. You have 20-year, 30-year debt. and while markets are, but your new interest rate could be 6.5 to 7. You don't want any of that. So you're going to stay put. So there won't be a housing crisis, which is what happened before. This is all about the interest rates. This reset is all about the debt coming due. You have 1.5 trillion of debt coming due by 2025. That's why the motto is survive to 25. You only lose money in real estate when you're running out of time or money. I'm sorry, money or time. And what I'm going to add to it now is creativity. You know, there is time. There is ways to extend your time. If you have a great relationship with your lender, they'll buy you a little bit more time. How do you have a great relationship with your lender? Keep them in the loop. Hey, I'm trying to refi. Hey, I've made every single mortgage payment. I've never been late. I did all my draw requests. All my quarterly reports, my yearly reports are up to date. I need a little more time. And chances are they're going to give it to you because they don't want this on their balance sheet. There's a misconception, and I believed in it too for a while, that banks want to take back your deal. They don't. They don't. If your deal is paying and it's performing, they don't want to take it back. They'll buy you another 6 months. They'll extend you. They might ask for something in return, but they'll give you another 6 months, probably interest only to help you get to where you need to go so you can get permanent debt and get off of it. This reset will be short-lived though. These are my thoughts, my predictions. The great deals will be at the end of this year. And you're like, well, why not right now? Well, right now, it hasn't been enough time. There is blood in the streets, but it's not thick enough yet. What just occurred is that we have property insurance just came out. It doubled. It doubled for everybody. And that puts significant pressure on the NOI. That puts significant pressure to meet DSCR. So not only is your debt moving against you, now you have your NOI that's going to get hurt. There's going to be some deals that are going to come due, or there's some deals that are going to have some issues at the end of the year and not being in compliance. And they'll be in what's called technical default. And you need to be ready because you got lots of debt coming. You need to be ready because everything that you ever wanted to buy will be on sale. So what are you hearing? What are you hearing? I'm going to tell you right now, everybody's going to feel this. Any owner is going to feel this. Any sponsor is going to feel this. Any investor, passive investor is going to feel this. So what are you going to do? Are you going to be ready? Next slide. I know I'm talking a lot. If you have a question, please feel free to type it in the chat box and we'll see what I can go. So what's the catalyst to the Great Reset? It's interest rates rising. That mofo Powell, the new Fauci, is making it hard on us. But now he's caused banks to fail. And he's scared because he can't have banks fail. Banks have your money. And the FDIC is not insured to handle all of our cash. They have 1.5% at most capacity to fill all the deposits in the United States. They can't let banks fail. So they're going to do their best to prop banks up. There was another bank, right? Was there another one that just went under that maybe not under, but that the Fed took control of a couple of days ago? First Republic. See, this is very incestuous. All banks sleep with each other, and they're all passing the same disease. And someone's going to die unless you're Magic Johnson and you find the cure for AIDS. I remember that. I remember Magic Johnson. I mean, I remember I was in junior high, and Magic Johnson was diagnosed with AIDS. Hey, hit me up on the chat box if you remember that. You know, say magic on the chat box if you remember when Magic Johnson contracted AIDS. I remember being in basketball practice. Guys were crying. Magic Johnson is gonna die. Bro, that guy is like a billionaire now or close to it. That guy owns so much real estate, it's ridiculous. So I think they have a cure for AIDS. I think they do, or at least HIV. But back to what I was saying. So rising interest rates, property taxes, man, anybody's been doing this game long enough knows that property taxes are going to go up. And that was our big killer a few years back, right? They're now been under control. What they do, they shock you. They raise you with 100% increase, and then you have to go fight them, and they come down by, I don't know, 60%. And you're like, that's not good enough. Then you got to sue them. And then at the end, you settle for like 12%, 15% increase. And guess what? You're happy. But if they would have started out with 15%, you would never have taken it. You would have been pissed. So they use a boil the frog method on property taxes. I have 2 refinances right now where I literally had, this is going to be in the refinance. I had 10 deals, remember? Number 1, I got closed last month. Number 2 is closing on Friday. I have 8 more to go. These are strategic refinances that get me out of my interest rate hell. I had the term sheet in my hand, and Brazoria County decides that they're gonna raise my taxes 150%. Unbelievable. So pretty much tore that up. Now we got to go through the whole process of fighting somebody and litigating and whatever. And luckily the lender gave me 6 more months because I had one of those loans is coming due. But you see, I'm keeping them in the game. We were going to refinance with them. They want to give me a loan, and they want to extend my loan because they're going to get the permanent debt afterwards. I'm a good borrower. I'm paying my bills every month. I'm agreeing to the terms of the loan agreement. So you got property taxes, which are going to hurt deals. You got insurance costs. I just said it. Everybody, you don't have to be in Florida and get hit by Hurricane Ian or whatever the name of that hurricane was that destroyed them. We've had our own disasters. In fact, if y'all don't notice, in the last 5 years, we've had more than 1,000-year storm, 500-year storm. You got ice storms, you got floods, you got everything. Well, insurance company has finally had enough, and many of them pulled out of the market, leaving only a few to offer quotes. And what happens when you get to corner the market? You jack up the rates if you're going to take on that risk. And that's what they did. What's going to happen then, though, is that the guys that checked out of the market, because I've seen this, I've lived this multiple times, the guys that checked out of the market are going to come back and say, hey, man, you got double? I want a piece of that. You know what? I want your market share, so I'm going to come a little bit below you. And then this other guy comes in, and he comes a little below you. So property insurance will level a little bit. It's never going to normalize. We know inflation is real, things that come up. I can tell you, it wasn't but 3 years ago when the price per door for insurance was $400. My latest quote right now, it's $1,600. In 1 year, it doubled. In 3 years, it's quadrupled. That's going on with everybody. It doesn't matter if you're a good owner, you've never had fires or claims, you're getting hit with it. So you got to get creative. What can you do? I think insurance will come back down. Luckily, the insurance that I have is the kind where if I want to get out of it at some point in that 12-month period, I can't. I've negotiated that. That's creativity. I found a policy that works for us. And finally, you have debt maturing. As I said, I had an example of that. Luckily, my lender wants to work with me. Not everybody's lender wants to work with them. You saw the one on Veritas. Their lender doesn't want to work with them and extend it. He sent him to special servicing. They're probably not very good relationship if they sent you to special servicing. So what does this mean to the passive investor, right? It means reduced cash flow. It means that your lender, now that your taxes and your insurance have gone up, your lender is going to increase your escrows so that they can meet that in a year. It means that you're going to be doing refinance events like we're doing, at either reduced proceeds or you might have to put money into the deal. The catchy word is called a cash-in refinance. What it normally is called is a cash call. But people don't want to use that word. But since it's being used in a refinance event, it's a cash-in where your new loan value isn't enough to pay off your old loan value. So you got to put a little bit of cash into the deal. Look, that doesn't sound great, but it's a whole lot better than losing the whole body. So if you got to take a pinky or maybe even a finger, you help your deal out and you do it. Ultimately, though, what this means is reduced valuation. So look, just like Blackstone, if you're in deals right now, you're faced with this. You know, you're faced with reduced cash flow, higher escrows, lower reduced value. You know, I had a deal. I was going to sell $100 million of real estate at the beginning of 2022 because I thought, man, we're going to go out on a shopping spree at the end of the year. I'm going to return all this money to my investors, and we're going to put it right back to work and go buy in this market. It didn't happen. Interest rates went up, cap rates went up along with it, and I couldn't get what I wanted to sell those deals. And I'm okay. They're cash flowing, they're making money. I'll survive this. You know, I got most of those deals we put in debt on it 7 years ago. We got until 2025. We're good. We'll just hold out. I'm not going to sell in a downturn. I'm not going to be a market seller. And what that means is somebody who's willing to sell their deals at current market expectations. You know, like everybody else, you got people that want a deal. And I don't mean like they want to find a deal. They want to take advantage of a deal. You got these bottom feeders, and they're everywhere. They're waiting like vultures, you know, that are circling in the sky. They see that you're slowing down and you're in the Sahara and you're about out of water. And they're not going to go fight you. They're just going to wait until you have to sell. Well, you got a chance to be one of those guys too. Just like Blackstone. While they're hurting on the one end, next slide, they're hurting on the one end, then they're also raising money to take advantage. I'm going to start out with the right side. The time to buy. So you always hear this quote, and it's credited Baron Rothschild. The time to buy is when there's blood in the streets. The next part of that quote is, even when the blood is your own. And that's what you have to get your head wrapped around. I know it's scary. I know the numbers aren't where they used to be. But it will pass. I promise you. I've seen enough of these markets. It will pass. But will also pass is your opportunity to take advantage and leverage out your risk. What if you can go and put $200,000 on a deal that should have sold for a whole lot less? I'm sorry, that should have sold for a whole lot more. You're going to buy a 2024 asset that was fully rehabbed in 2019, 2020 at 2019, 2020 pricing. So what you got to do right now is the same advice that somebody gave me back in 2007 when I joined his real estate club. You want to get all of your wealth out of the stock market. It is a paper market. I promise you. Remember what happened during the recession. Remember the monster swings in the stock market. That was fueled by the banks failing. If the Fed keeps pushing rates, more and more banks will fail. You got to be patient though. This cycle just starting. This is the time to get educated. This is the time to learn. This is the time to prep your game plan, prep your attack. Don't jump in deals. Man, I'm watching people do deals right now. I'm like, man, how are you doing deals right now? Why are you investing with somebody who has a very limited track record at the same time when interest rates are still rising? That means if interest rates rise tomorrow and you buy a deal today, your deal is worth less because you cannot sell it tomorrow at the same price. Again, like buying a new car, it's going to depreciate. You don't want to buy in that market. You want to buy in a market when the rates are stable. When Jeremy Powell shuts up, when he pauses. You know, you also don't want to buy from man. I've seen this one syndicator who teaches education and has bought some deals and whatever. He's now getting it in oil and gas. You see, I would stay away from that guy. He's showing you he's just a syndicator. He's a transaction guy. He's got to feel his need to transact. He's got to make his money. He knows nothing about oil and gas pumps and oil fields and refineries and whatever the hell he's pitching. I'm seeing it, and people are hitting it. Just because you're in multifamily and you've hit it, you've done okay over there. What the hell do you know about investing in oil and gas? Maybe you should go get educated first. Maybe you should put your money in the game before you risk other people's money. So be really careful right now putting your money in deals. Be really, really careful. You know, I was in that last cycle in 07, 08 because I had to. We didn't know that the recession was happening. We buy deals in 07, we were buying deals in 08, and we were buying deals in 09. And then poof, they all started to fall. And luckily we had big reserves. Luckily, I was able I was a former sales manager. I could teach my teams how to lease, how to ask questions, how to help the prospect visualize themselves in there, how to qualify, and then be quiet and let them store and let the resident fall in love. But not everybody's like that. A lot of guys lost their deals during that time. So be really careful. Let the market come to you. Right now, you should be conserving your investable cash. Stockpiling it, stockpiling it, stockpiling it, because there is going to be a chance for you at the end of this year when the blood gets super thick to go start buying deals. See, it's not now yet because the insurance premium just came out. And that the first people to feel it were the ones that had a policy due April 1. The next guys have I think the next big policy is May 1, and then it doesn't happen again until after the summer. Well, what happens in the summer? Hurricane season. So, you know, the insurance premium hasn't hit everybody yet, and they may get hit harder. Now, it could go down. The competition could come back into the markets, come back into the states, and that could help the situation. But that's a big risk. But if it does come in, but if it doesn't, if the premium does keep going up, the guys that are having those policies renew at the end of the year are the ones that are going to face more. And that's when they're going to be forced to sell or do something. And that's when your cash that you've been investing, that you've been stocking away will be ready to go. Monitor your daily balances. You should know exactly what you have in your checking, your savings, your money market, your IRA. You should be paying attention to that every day. Do not let that slip on you. When you ignore money, money leaves you. It's like a jealous lover. You ignore your money will leave you and find somebody who will pay attention to it. I think now is a great time to just go and take your money out of the market. So I'd be really smart too about bringing on new liabilities. Do you really need that car right now? I know the new Range Rover's out. It's beautiful. Do you really need it? Do you have the cash flow? Most importantly, be vigilant. Stay primal. Be ready to go out and hunt. Like those vultures, be patient. They're primal. They're not going to go fight nobody. They're just going to wait and be primal and just wait and wait and wait and let nature take its course. And when the blood is in the streets, even when you're bleeding yourself, you go buy because it will pass and you don't want to miss the next big market. All right.
You want to get into some Q&A?
Yeah, let's get into some Q&A before I move on to the next couple of slides. What do we got?
So Mike Bearden is asking, why ask if he wants to jump off? I don't know if we can get the one being.
Well, if not, he's asked the question. Just go. I can't read it. Can you read it to me, please?
He's just saying, if I'm considering selling my home, are you saying do not do that at this time?
Look, I don't know your personal situation. If you're going to go rent, hey, go rent. I don't know about buy a house right now.
Robert,
I don't think there's been enough blood in the streets yet. You're going to be probably leaving a really good cushy mortgage rate, but I don't know your situation. I know if you take a debt on it, you're looking at 6.5 to 7, unless you're going to maybe go get one of those 40-year mortgages that they're talking about now. And again, you understand why that's occurring, right? See, the American dream is not to own a home. The American dream should be to have investable assets. Your house is not an asset. Your house is a liability because it costs you money every day. That car is not an asset. It's a liability because it costs you money every single day. An apartment complex that's creating depreciation and giving you a loss in your K1, that's an asset. The rents are rising, that's an asset. You're creating equity, that's an asset. If you're going to sell your house so you can free up equity to go buy apartments or go buy investable securities or something, I'm okay with that if you're going to go rent. But I don't know about buying a house right now, man. I don't know. I think people will lower their pricing as rates do not come down or keep going up. because it costs you more and they know you can't afford it. So they're going to have to come down on their expectations. Hope that answered it for you. Mike, it was Mike, right?
Yeah, Mike, would you like to hop on? I think you can unmute yourself and also.
Well, we got to keep going too to get the other questions.
Okay.
Okay, if not, let's go to the next one.
Yeah.
Okay, I can see this. Do you expect distressed operators to be selling their deals via traditional channels, or do you expect them to be available elsewhere from lenders? I think it's all the above. What happened is a lot of guys are still in denial what the hell is occurring. They're literally in the fetal position in the closet. And they hate it when they get a text message or an unsolicited message from somebody asking, will you sell your deal? They ignore it. Anybody who's smart wants to go out to a full list and get maximum exposure on it, because somebody may have a 1031, somebody may be from out of town, who knows? The problem is that takes time. So I guess it just depends. If the seller has time, he's going to go the proper channels. If he doesn't have time, he's going to go through an off-market situation. He might even do seller financing. He needs a certain number. You're willing to give him that number, but with preferred terms, he might be willing to do it for you. Is that the next question? Should we sell rental houses, especially homes with strong equity, with the prices fall in single family substantially as well? I do think pricing on single family will fall. Now, if you sell your house, you realize, right, that in your house, you lose your renter, you now have to pay his mortgage. There's a lot of people say, my mentor likes to say that the most important number in multifamily real estate is the number of units you own. See, I've got 4,849 houses. I'm okay if I lose a few guys, but if I have a single family one and he loses his job, now I got to make it up. So I guess as long as you have somewhere to put the equity, I do believe and look, I know this is true. As rates continue to rise, the price of that house will come down. It is cheaper right now to live in Houston, Texas than it is to own. And 60% of the market already rents. Austin is going to learn this right now. Austin's had dramatic housing increase pricing. It is going to fall. I don't know where your houses are. If they're in Austin, maybe. I know they're going to fall because it is so much cheaper to rent in Austin than it is to own. So, you may have a dwindling market. I would check out the number of inventory on the market, and I would check and see what they're getting and how long they're staying on the market. And that's going to give you your idea. Hope that helped. But again, you got strong equity, right? You got somewhere to put it, man, pull it out. I'd rather have the cash in my hand right now. But if you don't need it, leave it in the house and just check in, right? Communicate more with your renter. Are they okay? Are they doing well? Check with them. Don't ignore them. Next question. What's the catalyst to start using some of the reserves, investable cash to take down deals? How to know the blood in the street is thick enough? Well, I was kind of explaining that, right? Now is today, this moment, April, 26th, is not the day to hit your reserves. The day to hit your reserves will be when there's enough blood in the street. As more of the market gets exposed to property taxes and specifically property insurance. Property insurance came out of left field. Nobody saw the insurance doubling. And you see, I can't protest that. I can't do anything. I got to be stuck with it until the next cycle, or until I see rates drop and I can get out of my current policy. Well, we're still in the beginning. Like, if I think where we are in the recession, we're in the second inning, maybe bottom of the second inning is where I think we're at. I wouldn't hit your reserves yet to jump into a deal right now. You need rates to stabilize. Now, if there's a chance you can get into an assumption deal at 2.99% and you got 5 years, hey man, go get it. Go get in it. Because we probably won't see 2.99 again. I don't know. Maybe we will. Today is not the time to get your reserves out. It will be at the end of this year or the beginning of next year. Remember, I said 1.5 trillion without you doing anything is going to come due by 2025 between now and then. So I mentioned I have a deal coming due. The lender gave me another extension. He gave me an extension. I'm a good borrower. I pay my bills. I hit all my reporting covenants. I was ready to refinance. He had just given me the term sheet. You know, I hadn't even get a chance to hardly read it. Literally, it's the same day I got it. I don't think I even had it. It was in my inbox. The same day that I got notice that my taxes had killed that refi. I should already be in the process. I should have had a presentation with my investors talking about it. But I can't. I have to wait. My property tax company that we use, you know, that we pay third party, has to go do their deal and go do the little song and dance. Da 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 da. Because it's a fucking game. It is. Every property tax company that I'm aware of is a former tax assessor. We use O'Connor and Associates. O'Connor was a former tax assessor. We used to use another group called Marvin Poor, another former tax assessor. They're all tax assessors. This is their retirement plan. They know this game. It's a game we're going to play every time you're in multifamily investing. Hope that helped you. If you were to sponsor a multifamily deal in Houston with your student, what would the JV look like? You know what? I've never JV'd with anybody. And it's not that I wouldn't, you know, I had pretty good balance sheet. You know, real estate has been very good to me since 2007. And you know, in part because I'm a good operator and I was able to create value and do all those refinance events, which went into my investors' pocket and also went into my pocket. So I've got a balance sheet today that I didn't have before. My net worth has jumped exponentially. So I would definitely KP on something, but I got to know who it is. I got to know what part of town. I got to understand the terms. I will not KP on a bridge debt. I have enough of that already on my own deals. If there's a permanent debt and the deal is in a part of town that I like, I won't do Greenspoint like this dummy that did the Arbor deals. I won't do Southwest Houston. You know, I'm not going to be in those areas. Maybe. So hit me up, send me a DM, you know, or if you're a student of mine, hit up with Jason and Jason will talk to you and let's underwrite your deal on our next call. Who do I use for a tax protest? So in the past, I've used Marvin Poor. We made a switch when there was apparently some stuff going on behind the scenes there. So we was a mad exodus that we got out with our people, and we've been with O'Connor and Associates. The same people that you should be using, you know, when you're protesting your house, they also do big multifamily. They also do all of our cost segregations. In fact, I've only used O'Connor for all my cost segs. So we use O'Connor, a guy named Bill Daly. If you want to send me a DM or contact Jason, he'll be able to get you the information. What else we got?
We'll do one more.
One more question. Hey, I like questions though, man. Don't cut them off as long as nobody's jumping off the call. Robert, we heard the history and your outlook over the next 2 years. Those that are loyal to go from here, what is your message? I'm not sure I understand the question. Am I misunderstanding that?
I think you just want to know your main passion, but I think you covered.
Yeah, I think I covered it, right? I mean, you know, right now, I'm not looking at deals right now. I won't do that to my investors and I won't do it to myself. It's the wrong time. My goal, all I'm doing right now is protect what I have. Everybody's going to get hit. Everybody. But how hard are you going to get hit? And will you stay down? I don't want to stay down. We've all been knocked down in life. I'm not going to get knocked out for the count. I got 10 deals that have interest rate exposure. And I say it over and over again because I don't want anybody to act like I'm hiding it. I got 10 deals. I take responsibility and I will put those to bed. I've got one that I refinanced last month. I got one that's refinancing tomorrow or Friday. I've got 8 more. Those 2 should be refinancing in the next 90 days. Number 5 should go at the end of the summer. And the other 5 are all recent deals with pretty good cash reserves. So I can withstand it. I let my NOI season. I can let some of what's going on play out. And I'll get creative and we'll improve operations and we'll do what we need to take. So, you know, I'm not really looking to do a deal right now. Not as a syndication, not where I'm going to go and ask my investors to give me some money. Now, there could be a situation where there's something advantageous where maybe I have a deal, my own deal, where, hey, you know, we're short a little cash. Let's come up with a little system where internally, you know, we can lend ourselves some money and get paid out at the refinance. That might work, you know, but I owe it to my investors right now to focus on getting us out of trouble. I want to be around 50% of my issues contained, with the other 50% with a clear plan and when they're going to happen before I decide to go out. But believe me, I'm going to preach what I'm telling you. I want to take advantage of this market, but I'm not in a rush. I've seen this kind of market. It's not this year. The blood has to hit the streets. And what I mean by this, you got guys that have cuts, but they have no way to put the cut away. So they will get infected. And we know what happens when it gets infected. It gets ugly and you might have to lose an arm. I want to be there when that happens. I want to be there to take advantage of what's going to occur. So what is trying to kill me and everybody else, the other 80% of the market, will eventually kill somebody else. And I want to be ready for that. I think I'm looking at the end of the year to the beginning of 2024 and throughout until we get to about 25. I think you're going to have a really good 12 to 24 month window to buy some quality deals. So don't be in a rush. Did I answer? Why do you foresee that the market will be right to consider selling any of your deals, particularly those you've owned? Yeah, you know what? It's not right now. You know, I think rates have to come down to make it appeasing for potential buyers to want to pay me a fair price. You know, if we're borrowing at 5.5%, 5.5 to 6%, that's what they want the cap rate to be. And I don't want to sell at a 6% cap. I rather just let my NOI season. I also don't want to sell when I just got hit all of a sudden with property insurance that I know is going to come down, or with property taxes that I haven't had a chance to protest or whatever. We need to allow these deals to play out. Look, when we do deals, everybody, I always say it's a 7 to 10 year horizon. You know, be ready, because you don't lose money in 10 years. We sell right now, we will lose money or potential equity that we would have made if we just held the deals 2 or 3 years longer. I've been doing this for a little bit. You don't want to sell in this market. There is nobody that wants to do anything but take advantage of you. They're letting the taxes and insurance get you drunk, and they want to take advantage of you. And that's what's going on. I'm not going to be taken advantage of. I'm nobody's prize. You know, no one's going to scalp me. I'm going to make sure my deals are ready for my investors. What do you see most deals need to refinance? Okay, where do you see? Man, it's between now and 2025. It's you know, a lot of the market went and bought deals. The deals that I'm refinancing right now, the ones that are these were all bought in 2019, and they were bought on 3-year short-term debt. You know, 3+1 type of situation, or 2+1+1. You know, that's what the idea was. We were going to raise the NOI, and we did it. We raised the NOI. If market hadn't moved on us, we would have been able to get 100% of the cash out. But the rates moved on us, which changed the way the leverage is and changed the proceeds. Question, when is it more bloody? 24 or 25? I think 24. 25 gives people a lot of time to figure things out. Like, again, I'm going through tax and insurance deals on my temporary loans, on my temporary debt, and also on my fixed debt. My fixed debt doesn't have interest rate movement, but it does have it does have property insurance and property tax fluctuation, but they're not coming due until 2025. So I don't think it'd be that bloody. I'm going to let it play out. It's the deals that people bought in in 2019, 2020, that did 2 or 3 year debt on them. Those are the deals that are going to come due at the end of this year, and they're going to come due in 2024. I think 2024 is the bloodbath. But I want to make sure you're ready. Get your money out of the stock market. Do not let us sit there, man. Do not. You got everybody laying off. Why do you want to invest in these companies? AI. Okay, let's talk about something on the side. AI is solving all kinds of things. I mean, what did Elon Musk just do? He went out there and pruned Twitter by 80%. And so we don't know what these companies are anymore. And we know that he put a lot of people out of work. Amazon's doing the same. Facebook's doing the same. Google, we thought nothing would kill Google. Google's about to get challenged really, really hard, maybe like it's never been, by AI. It tried to buy ChatGPT. They said no. They gave the middle finger. Said, we're not selling this to you. We might have $1 trillion idea here. Google's trying to take out its competition. Can't do it. They're going to have to create their own. And it's going to be trial and error. They got fat and lazy, just like Blockbuster before Netflix came, and they didn't do it. Can you talk a little bit about your multifamily course? Well, that's a really good segue. Who is that? Devin. All right, Devin, that's the next part of this. I want to help you guys get ready. Okay, I want you to learn from a 2-time national owner of the year. There is no other 2-time national owner of the year. So when I'm there with my students and we do a weekly call, or you know, on my accelerator program, where I'm there with them, we have live Q&A. I have some one-on-one students, but I have a big mastermind where I think you should come and spend time with me. You know, when I got my best learning is when I went and I sat down for a couple of days and understood the basics and the concepts and the strategy. And then we were able to go on a bus tour. See, I'm one of the few guys in the country that actually has all his assets that I can take you to. I'm the only education company that's a 2-time national owner of the year. Everybody doing education, these guys had not been around as long as I have. Most of them, 99% of them. They're all flash in the pans. I'm the OG. They're here because of my track record. So what I would do with you on day one, we're going to focus on underwriting and acquisitions. I'm going to show you the key people you need on your company, in your professional group. And here it is right here, day one acquisitions. I'm going to show you how to identify a market, how to use CoStar and other information databases. O'ConnorData.com is a good one. It's a very inexpensive one, the one that I use. And it gives you every occupancy, every rental rate for everybody in the city. We're going to then talk about assembling your professional team. You got to be, before you go out and buy anything, you got to get qualified. Who's your mortgage broker? I'm going to introduce you to my guy. Who's your attorney? I'll introduce you to my guy. Who's your property tax guy? Man, he's so important today. I'm going to introduce you to my guy. He's going to talk to us. And then who's going to run these deals? Are you going to run them? Or are you going to hire a property management company? I'm going to introduce you to my asset team and how we run our deals, and to executives from our property management company. And we're going to show you what they do. We're going to show you due diligence. Day two, man, we're going to get into the underwriting, man. That's the fun stuff. I'm going to show you how to underwrite a deal in 5 minutes. I remember when I was in the real estate club, I would be able to underwrite so fast. People were like, man, how do you underwrite deals? I can't get anything to work. And it's because you're a newbie. You're a noob. You don't know how to do this. You haven't seen enough yet. I live and breathe this stuff. I know exactly what my expenses are. I know if I know your rent, and I know how many units you are, I know that economic occupancy in Houston should be around 88%. I know that you probably need to have an expense ratio of 50-55%. I can do the math. I know interest rates are right now at 5.5, so I'm going to put 5.5 in my cap rate. I can do a deal. I can underwrite a deal real quick. I never even have to go to the deal. I can show you how to do that fast. And then we can talk about debt. See, when we're choosing debt, right? And if y'all don't do deals, you don't know this. We go to a mortgage broker. I don't go out and secure the debt. My guy's Brandon Brown. He's been around a long time. I've done like 90% of my deals with him. He knows my story. He will story tell to the lender, and then talk about our CapEx plan, talk about all the things that we're going to do, sell me and when I had nothing, just sell me and my previous experience. Now that I have a track record, sell me my experience and my track record. Then he presents me a matrix with 10 different loan options: permanent, fixed, semi-permanent, hybrid, recourse, non-recourse. And you figure out, what works for you. We're going to be able to expose that. And then we're going to talk about your business plan. Is this truly, you don't want to pull any refi? I know guys that don't want to put any debt on it. They get the lowest debt they can, and they hold it for 10 years. Let's figure out what your business plan is. Or are you trying to flip the debt? Are you trying to get it back in a 3 to 5 year period? I'll show you how to do our modeling, our financial modeling, and understand what the exit strategy is. See, the exit strategy for most people is the cap rate moving by 2 points. But with the interest rates being changing the way they are, that's moved. I don't care who you are, and if they're telling you different, they're lying to you. Everybody's pro forma is blown. It's like creating a bracket for the NCAA tournament. It's blown. Number 16 beat number 1, and it happened on the other side too. And then you got like number 12 beating like number 4, and the brackets are all blown up. That's what's occurring right now. Another example I like to use is that we're baking cookies, and it takes 5 years to bake cookies. But now, because of rising costs, I've got to pull my cookies out. They're still cookies. They just aren't what I was expecting. That's what happened on our last refinance. We pulled some cash out, but I did it in year 3 when I was hoping to do it in year 4, year 5. But I had to because of all these rising costs. We were losing valuation. I didn't want to lose any more valuation. So we pulled the cookies out of the oven. Same thing going on the deal that I'm going to refinance this week. Fantastic deal. But the cap rates changed on us because of the interest rates. I got to save the cookies. I still got to have cookies for the party. They don't look good, but they still taste like cookies. And that's what's going on. I'm going to show you how the exit strategies work. And then on day 3, we're going to put it all together. We're going to get on a bus and we're going to go visit 2 or 3 of my sites. And we're going to show you everything that we're going to bring together, everything that I showed you on day 1 and day 2. We're going to underwrite the deal. We're going to do our due diligence on it. We're going to see what it's worth today. We're going to examine rent rolls and see in competitors and go to CoStar. And we're going to see if there's any rent growth. We're going to see if there's any rehab that we can do. Part of what I'm doing right now on these refinances, I'm holding money back because I just walked into a new 10-year debt after holding it for 3 or 4 years. So guess what? I need to have rehab money again because the improvements that I made are not going to last. So I'm going to hold some money there for a future renovation plan so that if rents do fall during a recession, I can make improvements on my property to still get top rent. I can change out appliances. I can add washer and dryers. I can do other things that'll make me desirable when the market's failing so that I can still get rent growth. I'm going to show you how to do all that. I'll be on that bus with you. And we'll talk about my scaling. Look, I've been very, very blessed. God has taken care of me. I joined real estate in 07 because, my boss played with my commission plan and I was having my second child being born and I needed childcare money and my boss screwed me on my commission and I wanted to make here and they want me to make there. That's why I walked into the real estate club. But I never imagined it would have changed my life. I never would have imagined it would have changed the lives of my investors. I got guys that have invested with nobody else or with a few others because they trust me. And we've added tremendous net worth to their balance sheet. And I want to be able to show you how I scaled. I used to buy 1 deal a year. 1 deal a year in 2010, 1 deal a year in 2011, 1 deal a year in 2012, 1 deal in 2013. It wasn't until 2014 when I started to realize, man, we got a little bit of some people here that can run these deals. Let me show you how, and then we started to grow. We started buying multiple deals, nicer deals. I've got 4 Class A deals now. I like running the Class A. Although I'll tell you a little secret. The Class A, as nice as they are, have the worst criminals. The white collar criminals. The guys that will apply and fake pay stubs. They'll fake bank statements. And man, the B and C's aren't smart enough to think about this stuff, or they don't know how to use the technology. The A people, man, that is the only negative right now because of what's going on. It's become very easy to have fraudulent applications. Luckily, I've got a good management company. We've been through this before. We know what software. We take our time to qualify everybody. We didn't have to do that before. You have to now. That is one of the secret things I've learned about Class A is that they are the smartest criminals. If people can try to screw you, they will. Especially if they know judges are slow to evict. Did you know COVID's over, right? I think it's over, but yet I got to still comply to COVID restrictions. So I have any federally backed loan, Fannie Freddie. It's not a 3-day notice to leave if they can't pay their rent on the 4th. It's a 30-day notice to leave. We're quickly becoming California and these other states. And they don't let me do landlord liens like I used to. If y'all know me, man, I love landlord liens. I like to go knock on that door and I wait for you to leave. And I'm going to take your coffee pot. I'm going to take your big screen TV. I'm going to take your PlayStation. I'm going to make it miserable for you to stay if you owe me rent. And that's what we did after COVID to get delinquency down. And guess what? You know how many people paid $6,000, $7,000 past due balances to go get their $1,000 TV back? They did it because they had the money. Well, I can't do that anymore. So it's become a little harder in operation, right? And so you got to use AI tools. You got to use a lot of the latest cutting technology to overcome the criminals that are out there. Because if you go into this and you buy an apartment deal or you invest with the wrong syndicator, you're going to regret it. So I highly, highly recommend everybody out there, before you invest in anything, you invest in yourself. You don't go spend $100,000, $200,000, $50,000 as an investment with somebody to buy an apartment deal if you don't really know what you're looking at. Come learn. Let me show you how to do this. Let me see if you can do it by yourself. Maybe you'll partner with me, or maybe you'll just be a really smart passive investor so you don't get taken advantage of. And you learn what questions to ask. Don't believe the rah, man. Everybody's a good storyteller. When they want to get your money, they will come up with a way. They'll get creative. Learn how to cut through the bullshit. The funnest times that I have now are on Tuesdays and Wednesdays when I have my property management update and I sit there with a property management company and man, I get pitched stories on this and that. I'm like, no, that's not true. I've been doing this too long. You see all these awards here? I got those for a reason. This is the problem. This is the problem. This is the problem. You need to make a change here. You got to follow that. Did you look for this? I'm educating the property management company. Let me help educate you. Let me help get you to the next level where you're trying to go. So here's our QR code. We have a mastermind that's coming next month, May 17 and 19. Please come. We do it at what's the place called? The Houston Improv, well located right there on I-10 and I think it's Worth or something like that. Fantastic venue.
Show the video.
Yeah, we get one second. Fantastic video. And spend 2 days with me inside the office. I'm sorry, inside the venue. Get all your questions asked. You see, I like sitting at the front of the row because I want to be seen by the educator, by the presenter, and I want to get all my questions asked. That's what you should do at any networking event, at any educational conference. You want to sit in the front row. You want to get all your questions asked so that you can find out if this is for you, right? So you get confident to decide if you want to move forward. And we have a little special giveaway. Jason will talk to you if you want to do it. Where if you could do a VIP ticket, we throw in some extra bennies. Come spend even more time with me. But for sure, everybody's going to get that bus ride. So hey, here's our package pricing. But before right now, the pricing is $5,000 and $10,000 on the general and VIP. But because of whoever's on this call, you have until this time tomorrow. I will cut that pricing. I don't do this. I'm doing this for you because I want to put more butts and seats at that venue. I want you to learn. I want you to tell your friends about it. I want you to come get educated. That pricing goes away tomorrow at 8:00. I have people right now that have already paid. They paid $5,000. They paid $10,000. So the general package is 3 days live with me, and we've never done the bus before. That's going to be awesome. Come sit with me on a bus on the last day. Let's have lunches together. Let me learn about you. Private mastermind chat groups. Let's do it. Hey, if you want a little more time with me, let's do our VIP package, right? How much will a conversation change your life? One of my mentors is Grant Cardone. Many of y'all have heard of him. He's a real estate billionaire. And most of his net worth, he'll tell you, came from investing in real estate the last 5 years. I pay him $100,000 a year for his mentoring. And I'm in his real estate club. I'm the premier member in his real estate club. I don't miss them because I want to hear what the smartest guy that I know, the richest guy that I know, is doing about the market so that I can make sure that I do that for my investors and for my students, share with them. So you get to take advantage of what I pay, that $100,000 private membership with him, one-on-one with him 4 times a year. And I'll share that with you. I'll share with you those video calls. You also get your own time with me. You'll get a 15-minute kickoff call so I can understand who you are and we can learn more about each other. And then I think we're going to do a VIP dinner, right? We do VIP dinners. How great would it be to spend even more time with me at night? And I think one of those nights we do it at my house, right? Yeah, we did it at my house. And it's so funny. We're going to show you a video now. Everybody said they loved the whole thing, but what they loved the most was just spending time with me in my house, getting to know me on a personal level, kicking back and having a drink with me and understanding. You know what? Let me show you in life. You have contacts and you have contracts. But before you can have a contract in life, you got to have an R with that contact. And that's what life's about. You've got to come meet the people that are where you want to be. So I hope you guys will take advantage of this offer. Hand to God, that's a discounted price. It will go up tomorrow at 8:00. That will not be continued past that day. Jason, that is not going to be continued past that day.
Marcel is on.
Where's Marcel? Marcel's on the call?
Yeah.
Okay, well, we're going to do the video, but I'd love Marcel to just say something really quick.
Yeah, do the video.
Okay, let's do the video first, and we'll bring Marcel out. right now. What are the comments saying?
I don't see an option to like not share it.
All right, can they hear me? Can y'all guys, can you hear me again? Sorry about that. Hopefully y'all were able to hear the video. Somebody said they couldn't hear it. I don't know, man, that'd be disappointing if y'all couldn't hear it. But yeah, I want you guys to come and get us, let me help you get to the next level. You've got a wide mix of people in there. You got people that have never done a deal, but want to do a deal. You got people that have done small deals, want to get to the next, want to do more small deals or get to the next level. And you've got guys that got 500, 1,000 units in there. And they want to learn how to scale. They want to learn how to get better. I would love to have you guys come and visit with me May 17th and 19th. It's in Houston. Most of you are probably based in Houston. Take a little time, invest in yourself, but before anything, invest in yourself before you invest in anything else. Is Marcel there? Can he come up? I'm going to bring one of our students up. I didn't know he was on the call.
Hey guys,
Okay, well, maybe he's not on anymore. Are there any more questions?
I'm on.
Let me answer
Can
any
you
more
hear me?
questions. It's already 8:30 and I don't want to keep everybody out too much.
So someone's just, Duke is asking about the floating rate loan properties, but I think you answered.
Yeah, I've answered that already. Yeah, we have 10 different floating rate deals. And it's my challenge to put them all to bed. But I got to go one at a time. I put one to bed last month. I put one to bed this month. I had 2 more ready to go put to bed. And then I had the term sheet in my hand and then they raised taxes on me and insurance now. So we'll have to see how that plays out. But we're going to get it figured out, right? Because you back the jockey, not the horse. The 5th one will hopefully be put to bed in the summer. My big boy, City Crossing, bought in right at the end of COVID, stole that deal, and even with all the issues, we're going to make a killing on that deal, and then the other 5 are all newer deals and that they have cash reserves and we'll be able to get the NOI up and focus on a refinance on those either at the end of the year or at the beginning of next year. But that's my number one focus. I come here every morning and I leave late just like this. I'm one of the last ones to leave most days because I'm there making sure we're on top of it. So Duke, I'm all over, brother. I promise you.
So Marcel is on. I want to ask if he's.
Yeah, can you hear me?
Who else you got? Let me keep asking questions until you get Marcel up. Okay. Big regret was not doing the VIP package. Oh yeah, Jonathan Chavez, man. I appreciate that, man. I agree. that was a regret, man. You get to spend extra time, man. You're already here. You already made the investment. Just spend a few more dollars. Help me cover costs and get all your questions answered. Have a drink with me. Spend time with me. Listen, and more importantly, spend time with the other people there. Do deals with other people. Listen how to create a brand. I mean, I don't think I put that on there, but we got to talk about social media, right? How are people going to know you? Man, before people have to know you before they can flow you, right? If you are unknown, how are they going to help you? You got to build a brand. You got to let people know you exist and what you're doing. You're going to be out there and in front of one of your deals. Hey, it's Robert Martinez. See this deal back here? It's a 1974 126 unit deal. I love it. I love it because it's $300 below market. It's $300 below market because the guy is an out-of-town owner. He's held it for 10 years. He doesn't really care about it. We're going to pick it up for a song and a dance. I'm going to put $200,000 of my money. I'm going to raise $2.5 million to buy this, and I want you to invest with me. I hope you guys are interested in this. If you are, hit me a DM and let me see if I can help you. Done. Learn how to do that. Learn how to do that. And if you can't do it, partner with somebody who knows how to do it. Somebody's got to be good with money and numbers, and someone's got to be good with the sales. I'll teach you all those things at the Mastermind. We'll go into it. Any other questions? That was a good one, though. I appreciate that. All right, guys. Hey, thanks so much. I'm glad I was able to be here tonight. I'm glad you made time for me. And thank you to my guys for sticking around late tonight. I hope you guys got the QR code. I hope you're signing up. I would love to visit with you some more. I think it's a great price. You're getting a crazy steal price. So, Jonathan, you're there. Dude, come back, man. The information is all new, man. Hit the VIP. That's cheaper than what it was last time.
He's part of the seller
Oh, he is. He's in the Accelerate program. Okay, great. Yeah, and we'll talk to you about our Accelerator program. It's a private group that we have too, if that's something you want even more coaching on. But just get introduced at the Mastermind. Come sit down and let's talk about your financial future and how you can take advantage of the Great Reset. See you guys next time.